Kia ora tātou katoa, ko Tongariro, tuku monga, ko Wakaro, tuku awa, ko Atu, tuku motu. Nō reira, tēnā koutou katoa. Congratulations, Wendy, for getting such a wise panel and one central banker together. There are other central bankers in the room. They're the ones who missed that fast-moving fashion thing at the top. You can see a row of suits over there. Why am I here? Why have you, a central banker, talking about this? Quite surprisingly, central banking and our legislation suggests that we are here to promote prosperity and well-being so that we have a sustainable and productive economy. That is the overarching purpose of our existence as a central bank. And the word sustainability, productivity, writ large. How do you see us normally during the day? Hopefully very rarely, but generally through the dry topics of printing notes and coins, i.e. providing the money supply, trying to make that remain a store of value, keeping inflation low and stable, and hence we end up with a balance sheet and we have an exchange rate. But also we are here to promote a sound and efficient financial system. And a lot of that comes down to achieving and maintaining financial stability. So when you look at that mandate that we have, climate change is absolutely directly in our face in a very constructive and a very challenging way. Constructive in the sense that financial markets, financial prices are probably one of the most clever ways of bringing the future into the present, because we love to discount, we like to work out the present value of an asset, and we like to make sure that it is going to be worthwhile paying the price that we have. Climate change is a real challenge for any long-dated asset. If you try to buy an asset that may not be worth anything in the future, or you try to sell that asset, the price is going to be very, very different. If you've bought an asset for a big price and suddenly it is worthless, for example, that house with the ocean running through it, you might be a bit upset and have a financial shock. If you were the bank that lent on behalf of to that person to buy that asset, you are now out of the money. If you were the insurance company who had insured that region against floods or windstorms or fire or whatever the potential natural hazard is, you are now out of money as well. So the financial system and financial stability really has to think hard around the implications of climate change. They have to think hard now, and they have been thinking hard for a long time in a couple of different ways. The first way is a lot of relative prices have already been shifting. Some people are now noticing them more. By way of relative price, I mean that when you go to invest in an asset which is going to be sustainable through time, or going to be worth more through time because alternatives to that asset are now worthless, you will have done very, very well, and the price of that would have already shifted. Likewise, if you're investing into assets that may be stranded or of no use in the future, then you will be discovering quite quickly that it is worthless. The challenge, of course, becomes that which of those assets, and are those relative prices moving sufficiently enough for us today to make sensible decisions about what it's going to look like in the future. One is about a financial shock, where we suddenly wake up in the morning and think, wow, I didn't really think far enough ahead about that decision. And I totally agree with what I heard earlier, that we are very myopic as humans. We are less myopic when we start to think about long-term, long-dated assets. So what am I saying? Financial stability is threatened by the physical side of climate change. What will happen to the land use? What will happen to the assets? What will happen to the liabilities that I have sitting on my balance sheet every day? Both holding, borrowing, lending, they are real. The other part, and the most optimistic part I have and the most useful role of financial markets, is in the transition. If we can get people thinking about risk in its totality, not just market risk, credit risk, liquidity risk, but also climate change risk, and that gets priced into assets, then it becomes one of the strongest relative price drivers of how we behave today and in the future. And I'd like to say at the moment, one of the great tipping points I've been here for 56 of that last 40 years of doing nothing, so I can be part to blame. But I was certainly part of a consumer revolution where we never really used to care about how many people died in the making of this jar of peanut butter. Now we know exactly where it came from, what sits in it, and who may die from eating it. Consumers marched with their pockets, with their minds, with their wallets. Now investors are globally. They are truly looking for assets that have all of the right risks priced, where you will get an excellent premium for having bought something that is long-term sustainable and allowing the transition, or you will get a big discount if you've bought something that is probably short life going on. So it's a great turn. What are we doing at the Reserve Bank to play our role? We're doing three things. One is we're getting our own house in order. We do have a balance sheet ourselves, and we're thinking hard around the carbon footprint of everything we do, both physically but also financially. Two, we're leveraging correctly, and I would say, about time, we're leveraging our regulatory role to say, what are the banks, what are the insurers, what are the non-bank deposit takers doing also about understanding what's on their portfolio, both in the assets they lend to, but also the liabilities where they borrow their money from. And this is a real-time activity where we are working on the transparency and bringing this into today's decision-making inside of institutions. We're not doing it alone, and in fact we are not leaders in it either. We are joining a lot of, standing on the shoulders of a lot of global giants. There's now a most recent network for the greening of the financial system in the world, which is, I think there's about 35 central banks globally now who are all involved in our work, particularly the regulatory work around banks and insurance companies. We've been working very close with the United Nations Carbon Disclosure Project from my old role at the New Zealand Super Fund, and we have been working around the UNPRI principles. So it is real, it's global. New Zealand is behind, it's not even on the edge. New Zealand needs to be in the forefront and should be in the forefront. We're small, we're isolated, we're green, we have the least to lose in terms of reliance on carbon, we have the most to gain in terms of reliance on productivity, on owning the environmental space globally, and the rest of the world want us to succeed. So that's my story.